All right, what's up, you guys? This is Janos with Trading Spies, and here we go. Another beautiful day. Yesterday also was another beautiful day. Yesterday I didn't do any recording. I was very busy. But here we go. Past 2 days, both of the days excellent. Today we made about 2.5 times the daily goal. Yesterday we made about 2. Another 2 days. Green days altogether since June 16, so we're running close to a month already with our green streak. And today CPI report came out. Initially we jumped very high, and during the day it was a very interesting few minutes in the market. I will explain once we get in, but that's something. If you would do something like this, definitely the IRS would be on your throat. I will explain what I mean, but definitely this again, it just shows how the market is manipulated. But nevertheless, we just need to know how to trade, right? Need our parameters, how to trade. We have to have our plan, and we have to honor our plan. That's the only way we can move forward in this business, because it's a lot of headwinds for the traders like you and me. And you need to learn. You have to put your time on to the real-time market, not the charts looking back, oh, this is what happened and that's what should I have done. No, you have to have time spent, even if you're not trading, just to watch the market, how it's unfolding. Either goes up, either goes down. A lot of indicators, lagging indicators, and you don't see during the market. Actually, step back a little. You don't see on the charts what's already formed and look back, how did that happen, right? Because let's say the market moving down, right? But you have a little uptick, and your MACD or stochastic, your whatever, most of them is working tandem, different calculation, but start to moves up, right? You see it start to moving up, your indicators suggesting the up movement, but the next 3 candles basically is gonna wash out the movement, and your indicators basically just continue the downward spiral, even for initially was there, right? But that you don't see on the form chart. That's why you need time. That's why you need understanding how the market forms in real time. The charts helps a lot when you go look back, you know, what happened. But during the time while the market is open, that's the best way how you can set your plan and your understanding how everything works. Again, if you guys like these videos, please subscribe, hit the like button, turn your notification on, and let's just get in. Let me show you the breakdowns. All right, let's start our recap here. The market just closed, and let's go over. Today was a very complex day to trade, and it has quite a few head scratching moments. Let's put it that way. But either way, let's start it. Let's break down how we traded, what we traded today. The CPI data came out initially is a lot softer than expected, so the market shoot up higher, little pullback, and then basically continue up. My first trade, we have to go back to this area all the way to last year, July. What happened there? So that's where these lines, most of these lines are coming from back last year, April. So we have to project it, right? Because these level was never retested. So those levels, what happened back then, those are what are valid right now. So my first rate today, and we get back to the same choppiness. Doesn't matter we move to a direction, but is so choppy, wicks up and down. The candles are the same size, and today I didn't have the feeling the market is flowing. Overall volume was an average volume, maybe a little bit less than average, but the way it's traded with burst of momentums, right, and not 1-2 cents, as you can see it and feel it most of the time as the market flows. Basically it was jumping up and down. That's why basically you can see the wicks, and a lot of candles are the same size as the previous one. Because of that, it just didn't feel right the whole day for me. So my first entry was at 10:02. As we made our pullback, we initially started to regain, and the last second of the candle close, we just moved down. And usually the indication, and most of the times what happening is we start to go back and we make the break of the high. So that's why I entered in the 10:02 candle, exactly for that reason. We pulled back, we opened higher, and that was the main idea. And of course it didn't work out. But lately I'm not panicking when the market move against me, because the way it seems, we just dumping, and then right away we're gonna regain everything. And this is just the norm, as it seems, happening. So that's why it's very, very important to watch the live market and try to tweak your trading, try to adopt what you see. And of course it's gonna be try and error, but you have to gain a perspective how the market moves, right? And that's only you can achieve it from the real time when the market's open. On charts you can see, yeah, it went down, pulled back up, went back up, I should have buy it here. Yeah, that's correct. But I think you really need to watch the real market. And also this is when it comes to play, and it's a very, very important thing, and it's a lot of other YouTubers saying it too, not because they try to cover themselves with the disclaimer, but because it's true. You need to be on the market, even if you trade just one share, just one contract. You need to feel how it moves, because when you're in the simulator is only to feel how your keyboards, how the system reacts for your keyboards and all that stuff, because the psychology is not there on the trading simulators. And that's why, in my point of view, is I don't say worthless. I was on it for a very, very short time in the very beginning of my career as a trader, but it never made sense to me, because you can put a million shares and then you're gonna get filled right away, which is on the real market is not true. So you can always buy yourself out from anything. So it's just, to me, it's just nonsense. But the point to be on the market and trade on the market with a very, very small amount, you're gonna have a feel of the actual market. You actually gonna watch how the contract prices moving with the real prices. It's very, very important. So just take it or leave it. That's my suggestion. So in this case, also I added to my trade at 10.06. As we went below our initial level, this is our initial level here. As we went below, we moved higher. I added to my trade, and it did work out. We started to move very, very nicely higher, and my exit was basically on the 13.04, 13.10. Yeah, so everything, all my contracts I exited basically on 1 minute, and that was the 13 when basically it's a red candle as we moved, you know. I exited basically every on that single candle. So that was our first trade. That basically gave us about 15%, which was very, very nice. Next trade, 10.27. As we had our pullback, we made a new high. Next candle is a green. So basically it's the second green candle where I entered. Nice, we rejected the high. I didn't exit it. As we moved lower, we never reached the exit perimeter. Even we were down a little bit on the trade, but as we moved higher, I exited on the push up higher candle 41. This one didn't give a big trade because we had this pullback and we spent a lot of time right here, but still it's about 10%. Nice, 15%, about 15%, about 10%. So two nice trade. The third one was a very quick one, 50. And this I went to the short side. I should have held it a little bit longer. We have our trend line, right? And then we were very congested on the top. So that was a little suggestion. This will happen. So I entered on this candle. As it broke lower, I didn't wait for confirmation. Again, because the congestion, and then we have basically two candles already. What was testing that, and as we broke below that last testing candle, I entered, and initially it moved against me, but at this point you have a clear exit, right? If we make a new pivot high, I'm not counting the wick. If we move above the 447.39 level, then you exit. So basically you have a very, very tight exit. And in this case, as we move down, break my the initial candle low, and I exited on the wick down candle. This again a very small profit, about a little bit less than 10%, about 8%, because I started to doubt myself a little bit, which I shouldn't have, and that's never a good sign when you doubt your idea. So better to cut the trade before it turns against you and you are in a losing trade. Right now, a little bit of profit, because we still could have a lot of right resistance level here, which basically played the part, right? This one, that's where exactly this candle stopped, right? And then we moved higher. So I think I made a good decision to exit, even we know the outcome could have held it, but that's just fine. And this is where it's gonna be very, very interesting from this point. Pivot level, right? It was the original high of day congested, we broke through, we had support, 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 we broke down, we came above it, and I thought it's gonna be again, we're gonna start to move higher. And unfortunately, didn't happen. I entered into this candle, which is still a green candle, as we were broken above the 1102 candle. Obviously, this trend line wasn't here. Actually, yes, it was here before. No, this one wasn't, the other one was. So let me remove this one. The reason for this one, so two highs, not higher highs. We have our high, a lower high, so that's give us the leg, the second leg for the trend line. So these were here, and that was the initial target, but it didn't happen. We moved lower. What we look for, a possible bounce, right? Because we still on the higher end of our move, so we still basically on a higher time frame, a very, very nice bull flag, right? So basically my point for the entry, and I wasn't thinking exiting, my adding to my position, which was I take the VWAP as a very big support, and this point, this pivot level, right here, pre-market high, we retested, right, rejected, we support, this we can take it as an initial support before the big move up, right? And then these two congestion, we can take it as a support. We broke initially through, but again, that was my idea, to hold and move higher. So basically I added at 7, and I added one more time as we moved lower down at 9, which is very, very close to the VWAP. And then exactly that's what happened, what I thought it will happen. And here we go, we moved higher. As we moved higher, 18, 19, as we get to the trend line, I exited, right? We break above it, 18, 19. And this is where it's very interesting. I didn't exit all my position. I was waiting for the move higher. So I exited about 50% of the position, and that gave me already a lot in the trade, right? And that's becoming very, very important as we moved lower. And this is a very, very interesting part right here. We moved lower basically, and we break our initial pivot low, which later on is gonna be important the rest of the day. But these few candles right here, about these 3 candles, as we moved lower, it purely shows the market is manipulated to the level as really, if you would be the one who do something like this in any financial statement or anything what it's including for financials, you would be investigated hands down, and the IRS would be on your neck. Why did you do that? What this happened? And if you cannot come up with the good explanation, you would be done. So let me explain. Look at these candles. The average for this period right here, it's about 70,000-80,000 shares per candle, right? As we broke the level, we went over a million shares, right? And then the next two candle combine another million shares. And at this point, we traded probably, I didn't add it together, but the way I recall it and the way I see it, probably somewhere in a 30 million shares, maybe not even. So one or two candles dumped the market. 15 times more shares came through on one candle than the previous 30 average. Is just ridiculous, and this is just how the market is manipulated. And whoever say what, and I always say it, and a lot of people knows, you know, but you have to deal with it, right? And this is why it's very, very hard for new traders to gain momentum on the stock market, because instances like this, it is what it is. You just gotta deal with it, right? You know it exists, and you use it the best of your abilities, and that's it. That's a secret to it. To beat yourself about it is not gonna help. You know it is, deal with it, right? So basically, this is what happened. The market get dumped in a ridiculous manner, and then basically it's ruined my trade. But because I was in a profit, a very, very nice profit, it gave me the, I won't say confidence, because it's not a confidence, but you have to react quickly, right? What's happened over here? You had a pivot level, right? Market goes up, pulled back, and you had a pivot level, and that's what you had. And previously, this level, it was the few days prior congested high, right? So we had a very, very good support level. Right? Is this level what is coming through there? So all these are very, very important to react in a calm matters. So what happened is we pulled back, and basically I started to add to my position, and it was a lot of adds, and I'm gonna explain again what happened and what was the craziness for all this move from here basically to here. The contract prices barely moved anything. I was in right here, the 447 calls, right? So you are at this point, you are at the money, in the money, right? You entered out of money, you became so very, very close. Over here, you were out of the money, but it's not in a ridiculous manner as 5 lines on the option chain. You just only one away, but it didn't matter. The price didn't move to the upside. Only when the price moved against you, is drastically dropped, almost 1-to-1 with the cents. It was dropping 10 cents, your contract price dropping 5. So it was just ridiculous. But anyway, so it was a lot of add to this. I was adding, let me see, and I was adding small increments, 2, 3, 4 contracts at a time. I added I added 40 right in the bonds, 41 as it went higher, 40, 41, 43, 43, and then basically I was waiting, I was pausing what will happen. Basically this point when it moved up over here, I was very close to break even. Actually, I would break even. Very close to it. So basically what happened is we got another initial drop, but that drop is happened on a very low volume. So this again makes you think what's happening when the market climbing up and you get the same rejection on a tenth of a size, tenth of a volume. That makes you think again what's going on. So my next add to the trade was at 1203 as we formed basically our bottom, and that's what I was thinking. We reached the bottom because of the previous pivot low. So let's add to our little arrows right here. 1203, 1204, 12.3 as we reached the level, 12.04 as we moved higher, and then we started to gain momentum again, which unfortunately wasn't enough. So we pulled back and I added at the 18. So besides our initial entry, I added 1, 2, 3, 4, 5, 6 additional times, and then as we reach to the 1250, that's when I started to sell partially. 53, I sold 1, 2, 3, 4, 5, 6. I sold 30 contract, and basically this is 30 contract at break even. And that's why I know, because from here, as I said, we already were break even here. We moved higher about 40 points, but our contract haven't moved a cent, right? So what happened is as we pulled back, and that we formed a little flag, right? Right here, we moved higher, so that was very nice. And basically I hold through all this choppiness, and my last add was right here. I added an additional 20 contracts right here, and basically that's what is provided the bulk of the profit. This little move, it gives us a very nice profit. And as we moved higher, 10, 11, 13, 14, 15, let's see, 10, 11, 13, 14, 15, exited basically all of my position, and then we became very nice. And I had one more trade, and that was to the short side. Excellent entry, the rejection right here, 1243. And again, I had to add to this position at 301 as we broke lower. Same thing over here. The candle, doesn't matter, we dropped over 30 points from my initial entry to the addition. Went into my favor. it moved towards my direction with my initial thought where we're gonna go, but still we're 20% down. My initial entry was at 36, and this was the 446 puts. 36 cents, my initial entry, right? We move lower towards my thought, and my add to the position was at 27. 20% down, even the contract's moving towards my direction. So basically, that gave me a very, very nice average, and my exit basically was to the perfection at 22 and 23. 22 and 23. The difference between the two, I exited positions in the low 40s, high 40s, low 40s, high 40s. And in these, the mid 70s. So my love, oh, I didn't have time for it. And this one in the mid 70s. So imagine if I hold this average down here, we tripled 300% while it moved to the bottom. It's just ridiculous. And then as we reached, basically this we can consider, right, a major pivot level. We regain everything. So either way, we had a beautiful day, beautiful 2 days. So you guys just need to spend time on the market, on real time, and understand the market itself, and don't get hung up on it. If you think the market is manipulated, it is, but you cannot help it, right? Nobody's gonna help you, only yourself. So that's why it's important to build your plan accordingly and take your stop losses as needed. So make sure you don't blow up your account and you have another day to trade it, right? So, and as always, if you guys like the videos, please hit the like and subscribe button, turn on your notification, and see you guys soon with a new episode.